The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, the ECB just made a statement about an hour or so ago, and as you can see, the euro took a swan dive. This thing has been bearish for a very long time, and it looks like we're still heading towards the level of first level would be, I believe, 108, and then down to par is what I think will be what we'll be doing eventually. The longer-term chart picture, if you remember last week, we were watching this beautiful ABCD pattern that we had. This was just 6 days ago. You can see what's happened in 6 days. It's dropped just about 250 pips exactly. Today's low so far at 111.85 is a 786 retracement of the last low, but frankly, with that long-ranging bar like this, I don't believe that's going to hold very long. That ABCD swing itself measures to 108.80, so that's another 400 pips down from here. But, you know, it's very oversold right now because we've been down 6 days. I don't know if it's going to turn, you know, right now or go straight down from now, but it started in the right direction. That's the main thing to look at. The early morning call in the Dow is quite a bit better because of the McDonald's. Caterpillar's down just a little bit, and there's a few others, but McDonald's is up 5%, and it's a $100 stock, so that's got to push the Dow Jones higher by itself. The emotionalism that we have when these central banks talks is worldwide, folks. It's just not the case of Janet Yellen. When Mario Draghi talks, the same things happen. If you remember yesterday, one of the trades that I really liked a lot was the DAX, and you'll see here that we went right up to this level that we looked at yesterday while we were on the air, and we did back off about 80 points during the sell-off in the S&P yesterday, but the market took off like a rocket last night. That's right. When E.F. Hutton talks, people listen. Boy, that's an old company. Oh my gosh. I have a really interesting story about E.F. Hutton. 1972, I'm in Beverly Hills on Little Santa Monica in Wilshire, and I have a broker at E.F. Hutton that I used for soybeans, and his specialty was soybean meal. And I went in there, and he was talking to one of his customers. His name was Steve McQueen, and the great actor, and I had coffee with him a couple times over the years. A really nice fellow, and it was really, really fun to meet him. And but I just didn't, get to know him very much. But I did have coffee with him a few times. Anyway, get back to that. All those firms have merged. My God, there used to be so many of them, but that's not the whole thing of what we're looking at. That's the main thing. If someone's asked if they would put in the link for that Fibonacci DNA thing that we had yesterday, if you would do that, I would. Oh, someone's already did that. Thank you, Doc. I appreciate it. We always, Dr. Earl's got our back here. Anyway, thank you. Anyway, that's a really interesting thing that shows how, the DNA is related to, the Fibonacci, and all that stuff is related to natural law. But, natural law is like it says. These laws are made to be broken. We'll have to wait and see. I noticed that our nice federal government is going to release 9,000 illegal alien prisoners and increase the number of safe cities to 340. Pretty soon you'll be having felons on your left and right, but if you work at a bank, you're probably working with a felon anyway, so who knows. We'll wait and see what happens. Now we've got a potential trade setup coming here down the road. I want to First, what I wanted to do was just show you that crude oil yesterday, because I think this is interesting, because we were talking about crude oil breaking $45 a barrel. The first thing I did was right after I got off the air, I pulled up the last 4 or 5 days just to see what was happening, and as you can see, we had a pretty nice ABCD that measured down there to 44.85, and of course the markets rallied a little over buck 30 in the crude oil, but that still puts it in a bearish mode. It's not anything bullish, but it had the big rally. So if you're trading shorter term, you've got to look at a 30-minute chart just to make sure that you're looking at some really good support and resistance when you're watching it. So we'll watch this. You'll have to give me a little patience today, folks, because I'm under the weather here. I've got not only do I have a raspy throat, I have got some type of a flu bug that is just bugging the heck out of me. I'm going to take the rest of the day off. I have my lovely sister here visiting me from Indiana, and we have some relatives out here, so we're going to visit with them this afternoon and see what happens with our little get-together here today. But it's always fun to have my sister here visiting, because she's the equivalent of Mother Teresa. She really is. Okay, if you remember, we were talking about the bonds yesterday. We went down to that 57.09 level. We rallied up to 58.24, which was the 786 of the previous swing. With the ECB talking, that also pushed the bonds down. They rallied a little bit into that on a quick spike up, and then it backed off quite a bit. So those are the things that you kind of keep an eye on. There should be really strong support in those bonds at 157.16, 156, 157.20. That's what it looks like. Anything below that 157 area is not good. That means interest rates are going higher. That doesn't make any difference of what's going on or not, but that's neither here nor there. That's what we're looking at. Okay, let's get to the main things that I know you folks like to look at, and that is the gold market. We're still looking for a potential for the gold to get down here to this 157 level. I'm going to put this up and let you take a look at it here. This would be a nice, 5-day, actually be a 6-day correction, 7-day correction into the 157 level. At 157, you got several things that should give you strong support. One, you have the 382 retracement from the low of 1103 back on October the 2nd. That's the 382 retracement. Number two, you have an ABCD pattern that is absolutely perfect from the high on October the 15th. We came down. We rallied to a 61% retracement at 1182. If you remember that was a little ABCD that came in at 1181 and change. And now we're coming down to the 1157. The third thing is it's at the old high that preceded the breakout. That was at 1156. If you'll remember, we broke through that and then went all the way up to 1192. So we have three things there that tell us that could be some really good support in the gold. Now, does that mean it's going to stay there? No, it does not. It just means that that's a good level of support. It's a good risk control place, because you have three things to put your handle on. And so you buy gold if you want to buy the gold at the 1157 level. And I would say an $8 stop would be more than enough, to cover it. So you're trading something that's got a value of $111,000, and you're only risking, $8, $800. That's a really good risk reward ratio. So if gold is going to be bullish, this is going to be the stand that it's going to have to take here, because anything under 1150 is going to tell us that this is probably just an ABCD in a bear market. That's the main thing of what we're watching. Someone's asked me a question about what the European Central Bank did. Unfortunately, it's way beyond my pay grade, folks. I have no idea what they did. And, I know they've released something, or, whenever they talk about it, I frankly don't understand it, but it basically means they're priming the pump. That's what it looks like. The DAX that we talked about yesterday actually, hit that level at that 102, 10,258. It backed off to 10,178 yesterday, and then today it opened slightly lower, and then just took off. It's up over 200 points now. The last 100 points, of course, was Mario Draghi talking and whatever they were saying, and it ran it up, quite a bit. But I really don't understand, the reasoning before, why they're doing it. I just don't understand this. I don't understand what the Fed's doing either. It just doesn't make any sense that you keep using your credit card to pay your bills, or to add money to your account, whatever it happens to be. You wait and see. But we still got some stocks that are, acting pretty strong. McDonald's is going to be into new high ground today, and probably a couple others. So that's why the Dow is pretty strong. And then we have the employment numbers. It says that they're equal to they were in 1973. Are you kidding me? I mean, does anybody really believe that? I mean, hello? I mean, that's that's an absolute insane statistic if you believe that. But you have to believe something. So if that's what you're going to believe in, that's what you're going to believe in. I had a question that was posed to me over email last night about that trading that I had done over the years with the the Hearst method. That came from the Profit Magic of Stock Transaction Timing by James Hearst. Basically what we're looking at, we're just cycle lows of, the nominal cycle is 18 to 20 days or 18 to 20 periods. But that only usually works about 2 cycles, and then it expands and contracts. When I first started studying cycles at the foundation of the study of cycles way back in the 70s, Gertrude Shirk, who was running the place after Edwin Dewey had passed away, really believed that she really thought that the cycle stuff in the stock market was related to astrology, but they didn't have any empirical proof of that. And we have some glimpses that it works, and that's all they are, is glimpses. And who knows what we ever seen. So we'll see what happens with that. So that's all we're looking at. There's a name that I haven't heard in a long time, Peter Leides. Peter's an old friend of mine. I've known him. No, that was Peter Leides that did that. Mr. Z, Peter Leides is he's about 5 years older than me. He's a little more than that. He's in his early 80s. He's a really good friend of one of my best friends, Eddie Horowitz. He's the one that had that wedding on October the 18th. Peter was there also. And Peter lives up in the wine country up in Santa Rosa, California, and he trades out of there. He's one of the best technical analysts I've ever met. He has something that you guys would blow away if you've ever seen it. He has a scroll, looks like a Torah, that you unroll, and it is every single day of the stock market from 1954. He still keeps that up, and his son George does it too. So, yeah, Peter's a cool dude. 877-927-6618.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we've got a caller on the line to rescue me, Brent from California. Hi, Brent. How are you?
Hey, Larry. How are you?
I'm hanging in there, buddy. What's up?
Not too much. I don't get to call you as much as I used to. I think I told you before I'm on the noisy commuter train, but I had a chance to call you. I wanted to kind of just go back briefly to crude oil if I could. I like that pattern a lot. It was a pretty symmetrical pattern if you take it from that $51 high. It had a 4-day down move, and then it had a 2-day retracement. And then yesterday, I think, was the 4th day, that CD leg. And it came in, and it kind of held that support at that lower band. Yeah, I think that was a decent little place to at least look at it.
Yeah, it sure was. It hasn't done much, but, at least it's a good place to look at it anyway.
Yeah, so far it's held. And you're thinking gold,
yeah, I'm going to take we're definitely going to buy the gold 1157, risking $8. I mean, it's an ABCD in a down leg. That's what Gartley said is buy the first ABCD. Of course, it's only on a half-hour chart, but with gold, that's, I think, plenty. That's my guess.
Yeah, it's been hanging in there pretty well.
Yeah, and it's got other things there. The old highs down there at 1157 where it broke out from. And, so 3 things, that's enough. You risk $8. Sometimes you're right, sometimes you're wrong. You know that as well as I do.
Yeah, exactly. No, you described it well. That's what you look for is many different things coming together as possible to put in your favor. So All right,
Yeah.
well, have a great day, Larry. Take care of yourself, and I hope you feel better.
I will. Thanks a lot, Brent, for calling in. I appreciate it.
All right, take care.
You bet. That was Brent from Martinez, California, a beautiful place just south of San Francisco. And anyway, what I wanted to go over now, folks, is before we get to the break, we got a potential trade set up here in the next few days. 1 second, please. Boy, these colds can really be a pain in the neck. We're going to take a look at natural gas. We were alerted to this possible trade last week when we had Bill Koval on with WD Analytics, and we've gone into new low ground, which was certainly possible because when he was on the air, we had been in an 8-day rally that had only gone to the 382. So that was a sign of, pretty strong selling. I mean, market can only rally to 382 in 8 days. That's usually not a good sign. And now we've come into new lows. So we've got a potential buy zone setting up here in the natural gas, somewhere around the $2.36 to $2.30 per cubic feet. Now, I prefer to look at it at that 231, 232 area. And the reason for that is we have two Fibonacci expansion numbers at that level. We have the 1.27, and we also have the 1.618. In addition to that, we have the ABCD from the October high. So we're going to keep an eye on this. I don't think it'll happen today. We had a big down move in it yesterday. It went from 250, 252 all the way down to 237. That's a huge move down in natural gas. So we would expect this to happen, probably sometime in the next couple of days, being Thursday. We want to look at it most probably on Monday, but I'll keep this on our watch list to see if we're going to look at it. They have a pretty good ETF that trades natural gas. I believe it's UNG. And that's something that you might want to, keep an eye on because it's in the new low ground. That's going to be a low risk no matter what if it gets down there, because if it gets much below, 230, you certainly don't want to have anything to do with it. But right now, it's hanging in there, relatively well. So we'll see. We're going to be opening here very strong. The Dow's going to be up 150 of those Dow points is going to be in. McDonald's. So it's going to be a pretty big, but we're going to be up way over 100 in the Dow on the opening. So, and every time they've done this before, it's usually sold off. So who knows? I don't understand. They won't buy it when it's down, but when it's up, everybody has to have it. So we'll wait and see. The Treasury bonds have held the level. It went right down to almost perfect 618. Now we rallied back above the 158 level. And some of these markets are acting a little different than what you would expect, given what the ECB's said. But I don't know what they said, so I shouldn't answer that question because I don't know what I'm talking about. So I better shut up because I really don't understand that stuff at all. The charts, I think I have a pretty good grasp on, but nothing else more than that. We got to have come up to a break here. But when we come back, I want to talk a little bit more about John Murphy's chart yesterday on the distribution and advanced decline line, and we want to take a look at that. Take a look at it now, then I'll discuss it. Come back from the break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, Larry Pesavento for TFNN, and we have the chart up for from John Murphy showing the advanced decline line, how it's broken out above the 200-day moving average. Well, it backed off below it again, but with today, with the market up $100 and some, mainly by looking at some of these other Dow stocks like McDonald's. That's 5%, so that's 50 points in the Dow, right there. So we'll and it's above the 1.27, and we had that big expanding triangle there, but it's still in that zone where it could turn. But we'll have to just wait and see. We have the S&P's up about I think up about 15 or 20, and we got the Nasdaq up about 35 or 40. So we're moving along pretty good, to the upside here. But this advanced decline line has been the what's really pushed this stuff up. It's all started on October 8th, 3 weeks ago, and that is, we'll see what's going to happen. But this early morning rally, we've seen this happen so many times before, but we'll need to wait and see. Now, one of the things that I always watch, and it's still holding to this day. Of course, today is the day it might get up a little bit higher, but and that is the New York Stock Exchange Index has still completed that ABCD pattern. I haven't got the opening indication yet on the New York Stock Exchange Index, but that still is an ABCD in a bear market. That was Gartley's favorite thing, and we'll see what happens with it, and we'll just go from there. But this early morning emotionalism, try to stay away from that stuff if you can, folks, because that's exactly what that is. That's people that have no skin in the game that are just throwing money at it, and that's my opinion, of course. But I have never had any luck, just throwing money and buying strength like that, or selling weakness. Either one of those doesn't work for me because I really don't understand the pattern that's there. So I try to get to a point, whether I think it's right or not. Like yesterday in the DAX, you realize the DAX is 200 points higher. Excuse me. It's 200 points higher in the what do you call it? The shucks, give me a second here. It's 200 points higher where I originally sold it yesterday, and had a good profit in it. We took, it's a nice profit in it. Then we, lowered our stop down so that we wouldn't lose anything, which happened to be the right thing to do. But I didn't reverse and go long. I don't do that very well, so we'll see what's really happening. We'll see what's looking. But the Dow has broken below. The Dow is now up 100 points higher than the 61% retracement of the whole move down. The whole move down in the Dow was that number came in at 17,220, and we just hit 17,320, and so that's pretty much what we're looking at. So we'll see what happens. But New York Stock Exchange Index still hasn't given any reason to be a buyer yet. So we'll have to wait and see, what happens with this. But that's what I'm looking at. Remember, we've been up now. This is almost 2 months that we've been up in this rally, and I wanted to this is really an important chart for me, folks, because it's long term and it's got all the stuff that I like. The ABCD patterns and the 3 drive patterns. This is that long term chart in the Dow, going in the New York Stock Exchange monthly chart going back to 1997. You can see that 3 drive to a top pattern. That's also a 1, 2, 3, 4, 5 expanding triangle. And if you notice those red arrows, those were the retracements back after the high had been made. And that's what we have going on right now. We're at a 50% retracement in the New York Stock Exchange Index, which is actually quite weak because the S&P has made a 61% retracement. The Dow, of course, has gone above the 61% retracement. And the NASDAQ has not made a 786 retracement yet. So this could be, a really bearish situation if it ever turns down. And the $64 question is whether it's going to go up or go down or not. On a musical note or a funny note, yesterday in the Tiger Den, I was saying that I wanted to make a small wager on the Chicago Cubs, winning 4 straight to win the World Series, much like what happened to Boston in 2004. But fortunately, the betting gods were in my favor, and the game had already started, so I couldn't get the bet down. I was going to make a very small bet, but I usually don't do that. I was just doing it to try to get the Cubs a little bit of a boost, and I guess I did because they ended up losing the series 4-0. So I don't do any gambling. I play some poker, but as far as gambling, I don't do any of that. I used to do it up until about 1975, and then I haven't done anything. Have not made a bet on a football, baseball game since 75. Wow, that's been 40 years. Holy cow, unbelievable. And I kept good records through the years, and I was breaking about even. Never made much, never lost much, but I sure yelled and screamed a lot. And so now I don't even miss it too much at all. So we'll wait and see what happens. That's one thing that someone's asked me before. I don't know if you folks have ever heard my little lecture on this, and that is the difference between speculation and gambling. In gambling, it's predicated on the rules that a person puts up. Like once the rules start, whatever the rules happen to be, and it's predicated on an event starting, the turn of a card, roll of the dice, turn of the wheel, the blow of the whistle, the toss of the ball. And once that starts, you don't have any control over it. You can't change your bet. You can't do anything until the game is over. Within speculation, you can go in and in 1 second change your mind and get out with a very small commission. So we can control our risk in speculation, but we cannot do that in gambling. And not only that, but that we have the edge, what we perceive our edge anyway, whether it's pattern recognition or moving averages, stochastics, whatever you happen to have that works for you, then that's your edge. And if you have that edge, that gives you the thing that you need, to be profitable in this. But the thing is, you've got to be able to control your risk. That is the, that's what's really going on in the thing. And so we'll wait and see what happens. We had a nice rally in gold here, which is pretty good. So we'll see if that's going to continue or not. I'd like to see it get down to that 1157. I still think we could do that, but we'll wait and see. And we'll just one day at a time, as they say in the trade. So we got silver is up about 13 cents. We got the Dow up 150, S&P's up 18, and we're up 47 in the NASDAQ in the first 10 minutes of trading here. I still haven't got the first. Watch the New York Stock Exchange Index, folks, because I don't know anything about. They're asking me a question here about fantasy sports leagues. I see the advertisements, but I don't understand, what that is. I really don't. It's probably just another way of scamming somebody, would be my guess, but I don't know what it is. But anyway, they can try to get into your pocket on some of these things. You've got to be really really careful with. So we want to watch what it is. And hey, believe me, if you don't think that's gambling, and every state just about has a casino now because of the Indian reservations, and so it's spread out. And of course, it's hurt some of the major places like Atlantic City and Las Vegas. But gambling is a huge industry. It's billions and billions of dollars. So that's not going to change. We have lottery now. And back in the days of Prohibition, it was a numbers game, and it's the same thing. But they make it legalized, and so that's what you're looking at when you're watching this. So we've been trading about 15 minutes, still very, very strong, and we'll see how the market ends up, and we'll see what's going on. But the DAX has been the leader here. It really took off this morning, and that pushed up the S&P. And then when the earnings came out for McDonald's, that gave the Dow Jones another boost, and it took off also. So we'll be keeping an eye on those. The IWM has still, the small cap stocks is still lagging, badly. It made a new low, which is over August 24th, which is a bad sign. And the IBB has been, I know what I wanted. The IBB has been very weak also. I don't know if you folks watch the news or not, but there's some talk about this Valiant Pharmaceuticals, and Bill Ackerman is one of the big buyers of that, and the stock is down like 11%. And he is doubling down. And boy, I'll tell you, unless he's been in this stock a really long time and has big profits in it, boy, you don't want to double down if you got a loser, folks. Oh boy, I have a thing on my big painting here in my office, a big oil painting, and the number one rule on that oil painting is never add to a losing position. If you do that, you are violating everything that we believe in stock speculation. First of all, your analysis is wrong. A. B. You're increasing your risk exposure by twice, correct? And C. You're increasing your pressure by, who knows, 100-fold, whatever it happens to be. And so you don't want to ever add to a losing position. That's not a good thing to do. It's just really, what I really, of all the things you can do in our business, and that's including not using a stop, because sometimes you can use a death stop, and if you're good at it, you're able to do that. But you just should never add to a losing position. This was reiterated in Bernard Baruch's book, My Own Story, Jesse Livermore's Reminiscence of a Stock Operator. that is something, and for not just because he says he's doing it doesn't mean that he's doing it. So a lot of these guys like Warren Buffett and some of these other guys, they talk about what they're doing, but they do the other thing. And if you don't believe that, go back and look at some of the plays that Warren Buffett has done over the years. 97 silver market was one of those where he said, he owned 25% of the above ground silver in the United States, and silver rallied $2 an ounce. And when his Berkshire Hathaway report came out, he didn't own any silver. He had sold it those 3 days that it was going up. So you got to be careful about what people are saying, including me and everybody else. You got to do your own work, take your responsibility for it. That's the key, to what we're doing in these things. So we want to watch it. We got a lot of, pretty good strength here going into market. Looks like it's going to be a pretty strong up day by quite a bit. We've got the Dow's going to be up about 200 here. We're breaking new highs in the Nasdaq, and we're not too far from new highs in the S&P also. So this is going to be starting out to be up 230 in the DAX. So the risk on is take all the risk you want, because the Federal Reserve has your back. You don't have to worry about anything. And that's the idea. We got up 20 now in the S&P. We're up 53 in the DAX. We did make a new high by only one tick. Are you kidding me? You got to do better than that, boys. And the Dow futures also made a high by just a little bit, so it could be an interesting day. We got gold unchanged on the day now, and what else do we have? The euro still going down. It's broken below the 786 at 111.90. And like I mentioned before, the next level on that is 110.40, and then below that is 108.80, which I believe where the ABCD measures to 108.80 is where we're most probably going to be going. That would be what I would be suggesting that we might be seeing in the euro. I should put that up here because that's the biggest of anything that we trade. And remember this pattern, folks. You'll see we've been in a downtrend for a long time, but we completed that big ABCD up there on August the 17th, and then we came down, and then we made another ABCD at a lower level, right at a 61% retracement. That was only 5 days ago. And you can see, 1 second, please. You can see what's happened in those today's the 6th day. And the price that you're seeing on this chart here is 112.25, and we're trading at 111.60. The next level, as you can see, is that 110 level. That's another 160 pips, but we're going to be looking for the 108.8. That's what we'll be watching, for a spot, for a pretty good bounce. That's what I would be looking at. And so it looks like it's heading a lot lower, which if you're short, you should be a happy camper. So we'll see what happens with it. But we do have a lot of strength in stocks today, so you can't really hold on 1 second, folks. Wow, boy, this is tough when you got a head cold in the desert. It's been raining here in Tucson, so we'll see. The IWM is still lagging a little bit. I need to get the price. Let me see if I can get the price here. We've got, we did make a new high in the Dow Jones. We made a new high in the Nasdaq. I haven't made one in the S&P, but that's probably just a little bit coming off. And we also need to watch the New York Stock Exchange Index, because I want to see how strong it's going to be today, because that's the real market for me. And I haven't even got a price yet. So somebody be so kind as to, I don't even have a price on it yet. Today's the 22nd. Are you kidding me? It's only up a little bit. Oh my God, that's something that's not right. But, who knows? Okay, we'll take a little break here, and we'll be right back to my dumb show.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've got a caller from Florida. Rick, are you there?
I'm right here. How are you, Larry?
I'm good, my friend. What can I do for you?
Well, I've been listening to you, and I thought I'd just give you a little bit of information. If you have an opportunity to go to a health food store and get what you need is some oil of oregano. And
Okay.
take, usually it comes with a dropper. I normally take about a third or half of the dropper and just squirt it down my throat. And you need a chaser. You know, you can have just like a soda or something to chase it with. It's exothermic, so it kind of burns, but 20 minutes later, whatever bug you had will be gone.
Will my throat still be intact?
Yes, it will.
Okay.
I mean, what it does is it basically just burns off all the bacteria and fungus. If you have an opportunity, go on the internet and look up oil of oregano. It'll explain it all to you. But if you do that this morning, you'll certainly be able to enjoy your afternoon.
I'll try it. I've tried everything else. Nothing's worked, so we'll keep an eye on that.
And then the other thing is vitamin C. If you can take about 5,000 milligrams of that vitamin C, it'll get rid of all of those allergy symptoms for you.
Of course. I am taking that, so I do that.
Yeah. So anyways, I appreciate all your insight and all your stories, and I normally try to catch you every morning.
Well,
and,
thank you. I appreciate
all
that.
the extra effort that you put in, and God bless you, Larry.
Well, thank you, Rick. You have a nice day, my friend.
You too.
All right. Okay, folks, what's amazing to me is the New York Stock Exchange Index is not even moving at all. It's up a little bit, but very little compared to the rest of the markets. It's not even anywhere near any type of breakout level, but the rest of them are breaking out. So, or at least they say they are this morning. You have to wait and see. I was just alerted by my good friend Andy over in Bonn, Germany, about the DAX just made the 382 retracement of the whole move down, which is a pretty big thing.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.